You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 17th of July, 2017. We see an up week. That is the way that our candle ended. We have really more than a spinning top, a lot of up movement over the course of the last week after 2 weeks of down movement. And of course, that third week back on the 23rd, that's the week ending the 23rd of June, we had our weekly vertical crossover going down. We have the price percent oscillator sliding sideways, tending toward moving up. We have seen the derivative oscillator flip over to a green sign moving up. So we did have strong up movement over the course of the week. We need to watch for that in the coming week. We see, of course, two-day candles, with the last one being a strong up movement, blasting through the weekly trend line, had already moved through the 2-day trend line on the prior 2-day candle ending the 12th of July. So we do have lots of strong up movement in these charts. So please pay attention to that. We don't have any signs yet for any up trades. The weekly is still in a downtrend. We do, however, on that 2-day chart, are getting ourselves very close to a crossover going up. Hasn't happened yet. Derivative oscillator still in the negative, and the price percent oscillator has not crossed, so we'll continue to watch. No trade at this point in the S&P 500. Let's go back to our weekly chart. Move on, but continue to watch for that. And if, of course, we have lots of downtrending over the next week, you might have entry points going down, since the weekly and the 2-day are still in confirmed down moves. Let's look at the Qs, still in a confirmed down move on the weekly. The weekly is trending up, however, on the price percent oscillator. Derivative oscillators continuing to gain downward energy. We have a green open box up candle. Again, that up movement is above the weekly trend line, but it hasn't hit where the movement was originally starting down, all the way back on the week ending the 16th of June. As we go a little deeper into the 2-day chart, we can see incredible acceleration over this last 2-day candle, blasting through the weekly trend line. Hasn't crossed over going up yet, but derivative oscillators losing energy, and the price percent oscillators moving up rapidly. So pay attention at the beginning of the week, particularly to whether or not we're going to blast through the 2-day trend line. Now, let's keep moving along. We see for the day up, also everything up. The TLT, that's the 20-year bond fund, is in an up move. It is trying to see if it's going to cross over going down on that weekly chart. Hasn't done that yet. We do have 2 weeks of down movement, and we'll continue to watch that. Derivative oscillators lost an incredible amount of energy. It's not turned red yet, but getting close to it. Again, for the day, TLT up 0.12%. If we look at the 2-day chart, what do we see? Well, it is really sliding sideways at this point. The last movement on the 2-day chart is a spinning green top. Means, of course, lots of indecision, tending up. But again, derivative oscillators getting downward energy, and our price percent oscillator is continuing to move down. Now, as we take a look at the 4-hour chart, it's in a confirmed up move, crossed over going up back on the afternoon of the 12th. What it's really been doing is sliding sideways. We'll continue to watch and see what we see in TLT. Again, just remember, we've got confirmed up movement on the weekly chart, down movement on the 2-day chart. We don't have a trade. If indeed the 2-day chart does rotate over going up, then of course we might have a potential up movement. Will that happen over the course of the next week? Doubtful, but again, just watch for it. What's going on with gold? Well, we go to that weekly chart on gold. We see that gold was down for 4 weeks, but this last week is an up green candle in gold. However, derivative oscillators still gaining downward energy, and the price percent oscillator is still going down, not at the same rate it was back on the week ending the 7th, but on the week ending the 14th, still going down. We see our price movement is below the weekly trend line. As we delve a little deeper into things, look at the 2-day, we see that we have broken the 2-day trend line, particularly over this last 2-day candle. Started moving up before that on the prior 2-day candle ending on the 12th. So it's an open box green candle. We'll continue to pay attention to that. Of course, the main driver is checking out that 4-hour chart. It crossed over going up, as we told you back on the morning of the 12th of July. That was Wednesday, and it is starting to track up on that. So again, most important thing to pay attention to has been for many months our 4-hour chart. Again, continue to watch that. We do have the weekly and the 2-day in confirmed downtrends, but if indeed we see this weekly, this 4-hour chart crossover going down like the weekly and the 2-day, you may wish to get in. We know we have some people that trade solely on the 4-hour chart, and you know what? It usually does you right. Folks, that's where we have ended the week on Friday. As we go into this new week, you have questions, problems, concerns, please let us know. All you need to do is email us. That is, the email address is quite easy to find. All you have to do is email us, cw@chartingwealth.com. Doesn't get any easier than that. We're always happy to hear from you, to do all we can to help you in any way possible. You can sign up for our daily market review. That is available at our website. You just put in your first name and your email address. We will get it to you. God bless. All the best from the team here at chartingwealth.com.